Hey traders, warm welcome to you. Alright, so in this video I want to look at the tick index in some more depth. I want to specifically look at some examples. When we look at the pullback to zero trade, we're going to look at the extreme tick move trade. We're also going to look at the change in sentiment trade. If you haven't seen the previous videos I did on tick on the whiteboard, go and check it out. But I wanted to go to the screen because I wanted to show you guys some real world examples. Actually, they were pretty recently when I filmed this video, so it depends on you watching this, but super useful tool. Right, okay, so now what I've got up here is I've got a what have I got here? I've got a cash Dow basically. But what I'm going to do is I'm going to flick it over to the SPDR ETF, because the SPDR ETF, as we know, pretty much tracks the S&P. Well, it doesn't pretty much track the S&P. It does track the S&P 500. It's an ETF. And the good thing about this is the tick index is obviously during regular trading hours, so during the cash session, which the S&P 500 is not just the cash session, however the SPDR's is. From your perspective, if you're day trading or spread betting, you can trade the Dow, which will move very similar, not 100% correlation, but very similar to the S&P 500. So you could use the Dow cash on the chart, as I just have, or you can trade the S&P directly, or if you're spread betting CFD, like I say, you could trade the Dow cash, which is probably the most price efficient way of getting exposure to the US indices. There's no native tick on the DAX that I'm aware of. There may well be a synthetic tick, but I've not seen it. Anyway, so US indices, let's have a look. So the pullback to zero trade is pretty much where we see. In fact, you know what, let's just go straight to an example, because I know there was an example from a couple of days ago, because I was involved in it. Now I want to show you the actual correct one. It was after we'd had a heavy drive lower. Here we go, this is the one. Okay, so this is what we had. Let's look at the backdrop, because we always like to look at things in perspective here. We had a gap up and we had a gap to fill. You know, that was probably the thesis that most people were looking at. And so we get this little spike up, and this is a little bit of a range break fake. Okay, I'm not going into too much detail, but those that one's about. We range break fake up here. We kind of have a little bit of a fake out, start to roll over, and off we go. Really start to kick off, really start to kind of accelerate to the downside. Ticks start to get low, lowest of the day, new lows coming into closing that gap, got some momentum behind it. Little pullback after those three big candles, three black crows, I guess you could call it, pulling back and then starting to roll over. Now, the key here, guys, is that yes, that's a nice trade on its own, but how do we time it? Well, look at this tick index. This tick index, this line is not far off the zero line. Look at the pullback. As we pull back, the ticks have gone to extreme. They've now pulled back to zero almost. The little shutter below, try to pull back to zero. All this is just noise. If you're getting in at the zero line here, you're in at a pretty decent level, 22.279, whatever that worked out on the Dow. Really almost the high. Rolls over, almost perfect entry for you. Rolls over, and then you're coming out into low ticks, the low ticks. So you're probably going to be at the close of that candle for your scalp. Now, if you wanted to extend that and trade it for a longer term move, then that's absolutely fine. But don't forget, the drawback of the ticks, if you like, if you consider it a drawback, is it's a very short term indicator. It's only telling you what's happening in a very short term. So that was, you know, pretty much textbook. Let's get rid of that. Yeah, it was a pretty much textbook trade, that, guys. You know, it's pulling back to zero. And the important thing is with this is that you've got to ensure that you've got the momentum in the first place. If you haven't got the momentum in the first place, it's like any of these things. You know, you're not going to get the same meat in the move. Like, this is not that great. And yes, you know, we're sort of kind of extreme ticks here, which was on its own an indicator. But pulling back to zero, it's not a surprise move. You've really got to get the surprise move out of nowhere. Let's see if we can find one more. There was another one around here. This is when we were getting really hammered, so it's a little bit different. Where was it? So yeah, this is pretty similar. Okay, little tip, guys, in the first hour, be very careful with the ticks. They're just kind of getting settled down. So as we start to roll over here, you know, we start to get low tick readings, and then we start to pull back. Not quite as clean, but you can see how the ticks just can't get very high, can't get above like 200 or 300 after we've broken through some prior lows. Now, when we really start getting through the actual low of the day, you see prices holding, but ticks are very low. So there's no real change in sentiment. There's no real change in how the ticks are playing. The same as this downtrend here. We'll kind of move on a little bit ahead of ourselves here, but let's do it. You can see how the ticks, when we're in this downtrend, they are very steadily in the low kind of 0 to minus 1,000. Quite extreme in this example, but that's giving you all the information you need to know. Only little probes above are being sold into, and actually it's not a strategy I would use, but it's something that can guide you. Every pop up in ticks can be sold, and I know that's a bit of a hindsight thing because you can do it with stochastics as well, but it's worth memorizing and worth saying, okay, if I'm going to use a tick index, then okay, at least stay on the right side of it. Don't trade the extremes. What's the extremes in this scenario? Extremes are positive and minus 1,000, so don't sell into minus 1,000, don't buy into positive. Okay, so that was our pullback to zero type trade. I also want to show you the extreme type trade. Where was it? There was a good one around here, which pretty much signifies quite often the low of the day, especially if you coincide it with the kind of midday to lunchtime noon sort of spike, if you like. So pushing lower, pushing lower. Look at these extreme lows, guys. Minus 1,000 tick readings. Again, ignore the first. I did say an hour, but half an hour is probably alright. Look at these extreme readings. Minus 1,000. That's the low of the day. I love the day so far on that. Minus 1,200, which is a big tick reading. That's a low for a long time. And then, if you look at the high, we kind of push up and we change momentum quite a bit, because at this point here we change into, which was interesting, because maybe that is the precursor for the gap up. We're pushing lower slightly. It's a very shallow trend, right? And the ticks are kind of in the lower half. They're not quite as aggressive as they were earlier. And then we sort of see a change towards the last hour. They sort of become a bit more mixed, a bit more trades the upside. That gives an upside lift, and dips are bought. So you can see how the trend change in ticks often can be a precursor for potentially a trend change in price. We don't know on the pullback whether it's a trend change in price or just something to suck in some buyers. But if you see the ticks holding to the upside, then you can kind of be a bit more comfortable with that fact. Here's another one, another example of it being kind of range bound and just playing the ranges on the ticks. Extreme moves. We never see 1,000 print, which often we do on range bound days. We don't quite see that 1,000 print either side, but they're pinpointing the highs and lows, and you can then move your resistance levels down a bit. I put mine at around 1,000 because that's just kind of default setting. But if the day starts to become a little bit quieter and you still want to trade mean reversion, you can bring these down to kind of 700, 600, whatever it is, and use that then as a level to start fading. And if you're fading these tick extremes on the highs, you're doing okay. That one not so much. You're doing okay. You can use it as a guide, as a benchmark. Now, would you want to trade this kind of stuff? You probably wouldn't. You're only going to trade it on real excursions away from the VWAP. So tick extremes on excursions away from the VWAP, not a bad way to trade it. So you've got your tick pullbacks to zero, guys. You've got your trend changes. You've got your spikes. I want to see if I can find one more for you. I'm trying to remember what day it was that we had this kind of spike back. Where was it? It was a big move. I think it might have been to the upside. Let's have a look and see if this is the one. Yeah, this is not too bad. We can. This, I think this wasn't the one I was thinking of, but it is what it is. This was an okay move, right? And if you're buying ticks to pullbacks to zero, you're okay. You might be a little bit caught out there, but this is more exciting, this drive here. And especially when we're seeing over 1,000 ticks. We're not quite seeing over 1,000 ticks, so I think we just tagged it. Yes, we're just seeing the tag of 1,000 ticks, which is there. That's better. You want an extreme tick move, really. Then we get a pullback to zero. And you might think, well, that's not enough in it. But the point is, it's a very short-term scalping trade. You're looking for the spring to stretch, recoil, and stretch again. So any pullback to zero after an extreme may well be worth taking. Now, in an ideal world, I wouldn't want to see this much move. I would have preferred to see a good 1,000 tick reading here and buy this. And it's probably why we pull back a little bit lower than we would have done normally, because if this had been 1,000 ticks, we probably would have seen that pull back to just to zero, because obviously it's the distance between the higher and the low that you're looking for, and really you want it as high and stretched as possible to get that pull back to hold and then go again. So that's your pull back to zero, guys. That's also the trend change as well, and also the extreme. You can see how useful they are. Plot them on your chart yourself. Plot them on your screen yourself. On TradingView, it's USI:tick, and you can just configure it like this. I always have a zero line, tend to have a zero line, a plus 1,000 and a minus 1,000, just so I can see the whole thing bracketed and see what's gone on, and kind of grade everything in relation to that if I'm day trading it. Obviously if it's something that you're not interested in day trading, then the ticks may not be that useful for you. And actually, if we very quickly look at today, just look how interesting, even though we were gapping down on the day and we started out low on the ticks, once the ticks started to do some work here, this is where it's kind of get interesting. I wasn't involved in this, by the way, but as it starts to kind of do some work to the upside, it almost as if the sellers have backed off a little bit, and then we become a little bit more neutral in the ticks. And neutral, if we're neutral and we're stretched to the downside, will normally indicate a slow drift up, as we've got today. And it'll be interesting to see in the afternoon if we now change dynamic. Obviously, we're above the VWAP here as well. If we change dynamic and we do a lot of ticks, if we do a lot of tick work from quote 0 to plus 1,000, then people will be looking probably, and myself will be looking for a further move towards the close, especially at the end of the month as well. Or if we kind of start doing some low ticks, pull back to zeros, that gets sold, then we'll be looking to take out the low. So it gives you an idea and a bit of a guide as well, and a little bit of an extra kind of roadmap to help you on your scalping or day trading journey. All right, guys, take care. Bye bye.